What separates a wise and successful investor from the crowd? It is how he manages risk. We have industry expert Chirag with us. Chirag, could you please explain what are the different types of risk? As investors, how can we manage risk and benefit from taking the risk?
There are various risks and we have to embrace those risks. You can't avoid the risk, right? For example, if the person has to go from left to right, there are four cases of scenario. One is, so this is risk. One is high probability and low impact risk. The probability high, it can happen, right? It can bring 5% correction into the market, but you have to embrace those kind of volatility. You can't avoid them, but you can easily walk it down. So for 5% correction, or those kind of news are very frequent news, like election, right? Election comes every 5 years, and state election, every state election, and you will have 2-3 state election every year. Yeah, and you will have interest rate RBI policy every 3 months. You will have the inflation data every month. So when they come favorably, when they come this year, market can take a 4-5% kind of correction. You can't stay away from it. The second kind of problem, low probability, low impact. Probability also low and the impact is also low. What you can do if the probability low, and if it is, for example, there was an NBFC crisis at some point of time, you have to avoid those sector. So you can avoid this kind of risk by not putting money into, because the world has if there is some problem with some sector, you just stay away from it. Right? There are a lot of other things to do in the market. Why you want to stay there or keep investing there? The third is high probability, low probability and high impact. This is the most dangerous. It is actually dangerous than the fourth one, because it is a low probability. Nobody will think about it, right? But the impact was very high. For example, happening COVID was very low probability, but the impact was very high, right? So you can't even predict. They are not even discussed. And when you don't discuss it, you generally fall into this risk, right? So you can't avoid those kind of risks because it is low probability. They are low, they're less discussed. You can predict them, but once it happen, what you can do, you can manage your own behavior. During this time, you have to stay invested or you have to put more money, right? And the fourth is high probability, high impact. See, if the probability high, right, and the impact is high, you can't avoid it. You have to go into it, and it will happen to the entire humanity. Generally, the fourth kind of risk will never happen. It is like, comet falling to the earth. No, not comet falling to the earth, but if it is a high probability, it means that it can happen very frequently. So generally, comet falling on earth can't happen very frequently. So just this fourth kind of thing generally not happen frequently. It will happen 500 once in a 500 years, and when it happens, you don't have to I can tell you that you don't have to worry about your portfolio, right? That is what I can tell you. So it's an end to the humanity kind of thing generally. So if you see, whenever the correction has happened, there are some problems and the crisis in the market, like subprime crisis, yeah, European debt crisis, yeah, taper tantrum, COVID, and Russia-US war. What has happened? The market has corrected and everyone was selling. So most of the time, people will tell, there is a casualty error called. People will tell during the market fall, people don't invest into equity. Actually, at that time, people were selling and that's why market is falling. It is actually reverse way around, right? Because so many people are selling at that time, that's why market is going down. It is not like that people are not investing when the market is falling. It is because people are redeeming, that's why markets are falling. So it is again a false analysis, right? So most of the time during that time, many people were selling, and then many people are selling out of panic. The market will go down, because if 24-inch rain happen in a one day, even though there is a small problem, it will create a lot of problem, right? Because any best civilized city will also get into the flood, right? Because most of the time when there is a crisis, everyone try to run out at the same time. And when so many people run out at the same time, market will fall more than the actual problem. And that is what it has created opportunity. So whenever the market are falling, there are more sellers than the buyer, and the sellers are desperate. And that time the buyers are generally 5%. And there is a most of the time DIR net seller. And every time when there was such kind of crisis, if you have invested most of the time and all of the time, you have make money. And tell me a single correction which is not recovered. It is not any problem, can't bring end to the world. And if it is bringing end to the world, we don't require to look at our portfolio. So always think in that manner, right? That is what we need to do. So you have to be at that time 90% are the sellers and 10% are the buyer, and you have to be within the 10%, and that is how you have to be. We have to manage our behavior. And when there was no problem and you have invested, actually you have get lesser return and there are more problems. So if the problem loss list is bigger and bigger, it means that you are going to make money. And if there is no problem, you will get below average return, right? That is what is I can tell you. So majority can't be right. Always remember this: majority can't be right, majority can't be rich, because majority do with the majority go with the crowd, and minority took their own decision. So when you are going to take the right decision, most of the people are not going to be with you. Your family member is not going to be with you. Your friends, your relatives, your neighbors are not going to be with you. When you are right, you are few of the many who are going to make those decisions to invest. So whenever there is a problem, you just need to analyze this problem with this lens. So these are all the corrections, right? And believe me, from last 20 years, there isn't a single correction which has not recovered. But every time the correction happens, we think that, okay, this time it will not recover because this time it is different. But every time the market has recovered. If you want to buy a car, you just visited a car outlet and you have not yet decided, so you came back home. So the salesman would definitely call you after 2-3 days. So he'll tell you, okay, the car costs you 10 lakh rupees. I would like to offer you a discount of 5%. So now it will cost you 9.5 lakhs. So this is called the price discount, right? Now you're buying some more time, and you are not, you ask him that I'll tell you in a couple of days what I'm going to do, but you are not reacting to his discount. So after 4-5 days, he'll again call you. This time he will offer you one more thing. So 5% discount is there, but now he'll tell you that I'll give you 50,000 rupees accessories additionally with the car. So now what he has done, he has increased the value of the car. So there is a 50,000 rupees was a price discount, and the 50,000 rupees is a value of it. So total discount is 1 lakh rupees. So similarly, during that time, the market was corrected by 15%, but the discount was of 34%, which is actually as good as the COVID discount, right? So this is just the data. It is just a PE correction and a market correction data, nothing else, right? So this is how one need to take the action. You don't need to be very intelligent to make money.
Thanks for your precise answer. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.